This week for Dukascopy, we're going to take a look at the US dollar index. The DXY, or Dixie, as some people call it, made its best close, not just of 2019, but in over 2 years, just 6 days ago. But since then, it's fallen quite sharply. So is this more of the same back and forth type trading action we've seen for months, or is this the beginning of a new move? Well, we'll take a look at the DXY chart, as well as futures contracts for the British pounds, the euro, the Japanese yen, and the Swiss francs. Stay tuned.
Hi everyone, I'm Rick Bensignor, President of In the Know Trader, CEO of Bensignor Investment Strategies, and today for Dukascopy, we're going to take a look at the US dollar and all the major cross pairs against it, including the euro, the British pound, the Japanese yen, and the Swiss franc. So let's get to our charts. We're going to start off with taking a look at the weekly chart of the dollar index. I want to show a very clear 5-wave move down that's been highlighted here that started at the beginning of 2017. And in the 5th wave, we got a sequential buy signal, which of course is downside exhaustion. Again, part of what we do here is try to bring institutional models to those of you who are individual investors. This got us bullish of the dollar down here at the time. I want you to know that, and what's really important now is to see the exact opposite signal. There's now an upside exhaustion signal that hit up a week or two ago in the dollar, and that has helped get us bearish, along with what's called a setup 9 count. That's 9 consecutive Friday closes, that the close was above the close from 4 Fridays back. So that starts getting me bearish to the dollar, or at least not bullish. Let's take a look at the daily chart, and we can see multiple sequential 13 signals have appeared basically in a very similar level just beneath 98 in the dollar index. None of these have been broken to the upside as far as their stop out levels. We recently just went to the most recent 13 stop out level, rejected it, and started trading down. And as of Thursday, as I'm recording this, you can see we're very close to the bottom of the triangle and just above the 200-day moving average. If these break, and I want to go back to the weekly here, it suggests that we could get as far down as an initial target, about 95.75, but probably I'm thinking we're getting down to 94.5-ish as a downside target, and in a bigger decline, even down to just about 93. So the dollar is on edge here. It has started moving down, and most of what we're looking at is saying that it's a high-risk buy given the move it's already had and how much it's moved off of those lows. So now also let's take a look at what some of the currencies are saying when we look at them specifically as futures contracts. So here's a weekly chart of the euro, and notice that it peaked in 2018 on an upside sequential exhaustion signal, and now over the last couple months we've also got not only a downside exhaustion signal, but it came right against this key level here. This is called a TDST line of 111.72. That also is suggesting that the dollar is a high-risk buy in euro terms. Looking at the futures, you would tend to lean towards getting long euros here. This is a low-risk buy in the scheme of things. Also notice that using the Ichimoku chart, both rallies that we saw in 2018 and right on the cusp of this year, and then it looks like May this year, they all stopped at the baseline, this orange-colored line. If we can get through 137.55 now, we should at least be able to test the bottom of the cloud going forward, as well as the propulsion level at 116.75. So another reason why I'm kind of bearish the dollar and bullish the euro. That makes sense given how much of the dollar index the euro represents. But let's take a look at some of the other futures contracts. Let's take a look now. Let's move over to the British pound. So the British pound topped on an upside exhaustion signal, got a buy signal here, which was quick, tested its stop out level, held it for virtually all of 2015 before finally breaking down. So good downside exhaustion signal that lasted essentially a year, then fully broke down. And then towards the fourth quarter of last year, we get, again, downside exhaustion. We're getting awfully close to, and this is a tougher buy just because of Brexit, no Brexit, what's going on in Britain. But we're close to, we're also just potentially a week away from another 13 downside exhaustion signal. So we're going to say somewhere around 125, give or take, is really the pivotal level right now for the British pound. Let's take a look at Japanese yen. And yen futures, again, why we bring you these models? Because they tend to give you excellent signals. They don't always work for sure, but the bottom of the entire move, when you get bullish yen in 2015, 9 counts, again, calling several turns recently, fourth quarter last year, bullish call for the yen here too, and this has been moving higher, and right now this looks like we're essentially breaking out of our propulsion level, and the next target is up here at about 0953. So same thing, bearish dollar type of story. Last one we'll take a look at is the Swiss franc. Swiss franc's basically been building a bottom here for years. Notice the 9 count and the 13s here right at the end of 2014. 13 bottom here, 13 bottom here in 2019. Everything basically saying the same thing. You're better off shying away from the dollar and favoring the major cross currencies against it. How to contact me. For individual investors, it's rick@inthenotrader.com. That's my email. Our website, inthenotrader.com, has lots of videos and information about what we do. But if you are an institutional trader or portfolio manager watching Dukascopy, and you're interested in our consulting services for institutions, by the way, this year through May 31st, our official recommendations for institutional clients are up 34.2% on invested capital. If you're interested, go to BensignorInvestmentStrategies.com to find out more. Thanks much for watching. I'm Rick Bensignor. Have a good day.